In this infinite banking breakdown, ladies and gentlemen, I'm going to use the F word. Let's dive right in. I'm JDew here at the Cash Compound, one of the banking bros, and coming up soon, if you happen to catch this in time, the fall of 2024, we're going to be debuting a new keynote called Use the F Word on stage in Nashville, Tennessee. Let's take a look right now, and let's help you understand some of the words that I wasn't planning to use. I'm going to have to bring to you now. The F word is not just the F word, but it's what Nelson Nash, the founder of Infinite Banking Concept, said. You F everything that you buy, ladies and gentlemen. This book right here, the 5th edition, is what we're going to be diving into here to help you understand that the F word we're talking about today is actually finance. You finance everything you buy. There's two ways to look at it, ladies and gentlemen. Either you pay money, interest, to third parties because you borrowed from them, or you lose the interest you would have made. It's very important for you to understand that. So when we're talking about building your own warehouse of wealth and your own privatized banking system, we're talking about switching all the interest that gets paid out and that you lose to third parties, whether it's finance companies or the bank, credit cards, student loans, government interest, whatever. We're switching that back inside a personal system. We can do that through dividend-paying whole life insurance. But before we get into that, let's switch over and take a look at all of the money that we're letting out and letting loose out there in our world today. What we've got here is calculator.net. They've got a pretty savvy little system here to show us what it costs in reality when we buy something. So let's buy a home. How many of you are going to buy 1 or 2 or 3 homes out there in the world? In my town, I think maybe the average home price is $350,000, and let's put a 30-year term on that. If the interest rate is, if you get a great one these days, I don't know, you might get 3%, you're going to pay a monthly mortgage payment of $1,400. We can all see that here. It's not hard to understand that. Here's your amortization schedule, and that's an annual. Here's your monthly schedule. 30 years of this is quite a long time. So the question is, how much do you pay total over the course of time? Right here. You're going to pay quite a bit more than $350,000. Think about this. $531,000 when you finish your 30-year amortization schedule. If you just paid that out in a regular plan and pattern, you have paid an extra $181,000 to the bank, to a third party. When we're talking about infinite banking, we are talking about keeping those dollars. Nelson Nash said it really well, that all this money that's going out because of houses or cars or things like that is probably about 33, 34% on every dollar that the all-American man makes. So we're going to redirect those cash flows back toward us rather than paying them out. Now think about this. Over the course of your adult life, or maybe when you were a kid like me and we moved a lot, how many times does the bank make those types of dollars on homes? Because of the weighted interest that they put on the first 5 to 7 years of a house payment, also people are refinancing and starting over or moving, and someone else starts a new schedule on the same old house. Look how much money that's going to be over the course of time. Think about how many houses you've lived in. I'll give you a second. I've lived in a bunch, more than most people. But think about that. If the bank is able to make these dollars over and over and over again, take a look at the monthly schedule here one more time. If we look at the monthly schedule over here on the left-hand side as I move down, look how much interest is being paid over and over and over again. I'd love to be collecting that interest, wouldn't you? Well, it's happening over and over all the time. Okay, now houses may not be your thing. Let's switch over to this auto loan calculator here. Let's get an auto loan in here, $45,000, new car, maybe a sedan. 60-month term, I think that's fine. Why don't we put a 6.9% interest rate on that? Okay, a down payment of $10,000. I think that's fine. I live in South Carolina. Sales tax is 5 here. Title, registration, and other fees. Let's calculate. You can see that our monthly payment is $691. That seems pretty normal when it comes to the payment. And look at how much money we pay over the course of time. The $45,000 turns into a $35,000 loan because we had a $10,000 down payment. And here we go. Our total cost is $56,700. You can see here mid-screen. Okay, so that means we have paid $6,400 in total interest. Now, I know you got 2 cars probably in the driveway, maybe a boat or something like that, and Junior's getting close to needing a car. So think about all the cars over the course of your lifetime, probably double the number of houses. And what happens each and every time you buy one? The bank is getting this interest. So think about 10 cars over the course of your life. Think about how many cars you've had so far. I think I started out with a Geo Prism, 91 Geo Prism. Fortunately, my stepdad bought it and he paid interest on it, if at all, but he lost interest if he paid cash, which I think he did. And think about all the interest that goes out the window. 64,000, 65,000. Think of a lifetime of cars. Think of the different prices you've paid, and most of you out there have something in the driveway that is more than $45,000 or a $35,000 loan. Think of the volume of interest and not just the rate. We talk about that a lot when we're talking about infinite banking. It's not just the rate, 2, 3, 4%. It's the volume. And if you lose track of that, you're going to get lost in a bunch of math on rate and not volume that's leaving your family. Now, if I were the bank, I would want you to think about rate all day because I'm going to get the volume. So I'm going to let you and your friends out there just talk about the rate over and over again when you get together for drinks or you go to church and go out for milk afterward, because I'm the bank and I'm earning all this interest that's leaving your family forever. Okay, so let's take a look right here back on our screen, and let's be reminded of all the things in your life that you are actually financing. Remember what financing means. It means not only are you potentially paying third parties, but you are losing if you pay cash. You've got a lot of business interests out there. For those of you who run businesses, and here at the Cash Compound, we help a lot of those people. What about the insurances? There's lots of types of insurances out there. You've got premiums for all sorts of things that are not life insurance. You've got car and phone and fire and workers' comp and other types of insurances in your life. You've got memberships to the gym and the health club, maybe your HOA. There's all sorts of memberships out there. What if you financed these things through your infinite banking system? Because you're currently losing so much money. You've got all sorts of tools, digital tools out there like crazy these days, the Google Suite and your Apple and your Amazon tools, your family things. You got your Netflix, your Hulu, all of those things could be financed in your own system. You've got your health and things that are being taken care of on a monthly recurring basis in your life, and 101 other things that you could finance through your own private system. If you did so, you'd be able to be in a place where the dollars that leave you because you are using cash in some cases, I'm sure many of you are just taking in income from your jobs and your W-2s and businesses, and you are spending those dollars to pay bills. Well, what if you decided to finance them through your own banking system? You'd be keeping a whole lot of money because inside your own banking system, reminder, you never lose your money. You don't have to lose money when you use money if you use cash values. So we're going to borrow against our policy as it ever increases for unrestricted use of paying out all these bills, but our money stays in the game. Let's read a few lines here from Becoming Your Own Banker. The 5th edition book, the one I referenced here, has something interesting to say to all of you who have policies out there. We're going to be speaking to some folks this fall as this keynote debuts who probably already have policies. And because they have policies, they're probably thinking about getting great returns off some real estate investment, or maybe they're using it for a personal expense like their cars or their business. But a lot of people are looking for opportunities for big returns. And I think we need to go straight to these quotes here on page 23, 24 to be reminded that our banking system should be growing. Let's take a look here. Now for the complicated part, Nelson says. The life insurance salesperson calls on my all-American young man referred to earlier in this book, the one who was making in 2000 when he wrote this book, $28,500 after taxes and is 29 years old. and urges him to consider, quote, how much the world is going to miss you in the case of your untimely death, end quote. So he calculates his human life value by asking how much he expects to earn each year as an average and multiples that by the number of years he expects to work, assuming he lives that long. This is called coming up with your human life value, your economic life value, okay? Assuming that he will get pay raises from time to time, it is reasonable that this average annual income to be something like 38,000 times 36 years until he's 65, which will produce 1.368 million in income. You guys with me so far? Keep going. The insurance agent points out that he will use up something like 40% of this income stream to support his own needs. This means that $820,800 in income for his family and the charities he holds dear will vanish if he happens to die in the near future before 65. To arrive at a principal sum, the capital that would be required to produce that income stream, this figure must be discounted at a nominal rate of interest. The agent says, so if we were to have to buy a machine that would produce that income to your family, we would have to pay about $400,000 in cash for the machine. Now, that's how valuable you are to them and your charities. Mr. Doe, if you owned such a machine and it was subject to sudden loss of some kind, would you insure it? Mr. Doe says, by all means. The agent asks, how much would you insure it for? Why, $400,000, of course. If you will take an honest look at what this young man is now doing, paying over 35% of every dollar of after-tax income to interest alone. Remember, he's losing that to cars, to houses, to credit cards, and things like that. It should be obvious that his need for financing things is much greater than his need for life insurance protection or death benefit. If he would solve the need for finance through dividend-paying life insurance, he would automatically have much more life insurance and recover all the interest. That's what we're talking about, recovering all the interest he is now paying to someone else. But this almost never occurs because the mental block implanted by financial geniuses out there that, quote, life insurance is a poor place to store money, end quote. What a limited outlook of just what is going on in the banking world. Again, I remind you, Nelson says, if you know what's really happening, you'll know what to do. Ladies and gentlemen, boys and girls, it's JDew here at the Cash Compound, reminding you once again to finance everything you buy. Use the F word and use your imagination to get into the game of keeping the money that you make. If you just learn how to do that, everything else changes for you. Infinite banking, once again, is not about a rate of return. It is about a control, a guarantees, and usefulness of the dollars that come into your life. If you do so through properly structured whole life insurance, which we'd love to help set you up with, you keep the money that would have left. And now you still have it. What if you still had the $150,000 from the houses, the $6,000 from each car, and all the other things like your memberships that you pay cash for, your tools and your online equipment and things like that for your business? What if you kept those dollars and you could utilize borrowing power against their growing income tax-free liquidity for more stuff? It's a thing we think you should consider. We suggest that you save your money, spend someone else's. It's all about infinite banking here. We'd love to get in a conversation with you about the F word. We encourage you to use it.
Gave a lot of game, we never got a lot of things. Bow your head and say the prayer, we taught you how to be the bank.